Welcome to the January 8th, 2024 Advance Report from McGowanGroup clients and NetWorthRadio.com listeners. This is the first quarter 2024 McGowanGroup Wealth Management Client Update. Well, we're going to talk first about 2.5 years in the desert. And I'm going to show you what I mean by that and how we solved it or prevailed during that time. Then we'll talk about what's ahead in the first quarter update for investors designed to help you make great decisions. Look at this. You heard about tech stocks last year. They were up huge last year. I mean, that is all over the headlines, how big tech stocks were and how big the gains. But wait. If you go back to the beginning of 2022, the beginning of the Fed tightening cycle, graph it to today, you close the year with a 1.2% gain over 2 years. That's 2 years in the desert. You had to ride all the way down, not knowing it would come back up. Then, okay, it was a fabulous year. It got you back to even. The first week of 2024, the NASDAQ, this is the tech index, the NASDAQ 100, led by the Magnificent Seven and the tech companies. Now that index is down 2.5 for the year. That means you're a minus 1.2 for 2 years. That's not good, right? Now here we go. This is the S&P 500, a more broad index. It was 1.67% for the 2-year period. And this week, the S&P 500 is down about 1.5%. So that's near zero for the 2 years and 1 week that we've got graphed right here. McGowanGroup Wealth Management managed accounts over that time period were up over 7%, and our drawdowns, declines in value during the bear market cycle, were a lot less. We were adding great candidates in global high yield, energy infrastructure, nuclear, AI technology, and great pharmaceutical companies, including those diabetes fat drugs that everybody's going crazy over. And we did that primarily at the big dips last year and the year before. We caught great bargains in October. We caught great bargains in March. And it doesn't mean that there's not risk going forward, but it does mean that we've navigated this bear, getting ready for something extraordinary. I'm Spencer McGowan, your financial weatherman, President, McGowanGroup Wealth Management. This is our weekly client update, and we're glad you've joined us. Here, we look at the T-bill rate. Now, why was there such an ugly bear in 2022? Here's the T-bill rate. That's the Fed funds rate. The Federal Reserve overnight bank lending rate, they get to dictate what that is. They were way too low for way too long, and they took it, in my opinion, too high, and they're about to come down. How do we know that? Federal Reserve governors and board members, we'll call them the suits, do their own little dot plot projections on where they think the rates will be next year, the year after, and the year after that. They're going back to 2.5%. This decreased the value of great investment assets primarily in 2022. Then they level out. Now, they're telling you over the next 3 years, they're going back to a more normal 2.5 because inflation died. It was 9% in the middle of 22, and now it's 3-something, but you're seeing pockets of deflation, especially in real estate. Oh, this was the big story of the week. So I got this phone call from one of the top talk show hosts in Dallas. He said, $34 trillion in national debt. Run in circles, scream and shout. By the way, there's another government shutdown coming January 31st. And those of you that subscribe, well, certainly you knew back when we were talking about default and government shutdown, we graphed it and said, wow, market does pretty well and doesn't really need the government most of the time, unless you're a green company that needs welfare. Anyway, here we go. $34 trillion in debt. And I wanted to put that in perspective, all right? So we were doing that interview. That's a huge number. And then I graphed it. Look at this. These guys are out of control. So look at this, look at the debt levels. So here we're about 18 trillion, okay? Trump takes office, it's about 20 trillion. Trump ran it up to 23 trillion, or during the Trump administration, right? We see that right here. And then what happened? That's COVID. Boom. They went from 23 to 27. $4 trillion in just about 6 months. All right. Now we go into 2020. Here's 21. See these little flat lines? That means the government had to make it work with what they had, with what they bring in, because they bring in over $4 trillion a year. But they need a lot more to cover all their spending. Well, here they couldn't raise it because they hit the debt ceiling. Here they hit the debt ceiling. But you can see it just ramps up right after. Now it's 31 trillion, stays there for a while. Janet Yellen's yelling about default. And all of a sudden, the debt ceiling comes off and boom, $3 trillion in 6 months, getting us to 34 trillion right now. People worry, oh my God, when is too much? When is it that the investors will balk at that? So let me cover an important ratio right here, all right? The answer is we're not there yet, but if they keep running up $2, $3, $4 trillion in a year or 6 months, then they're probably going to hit it. Here, this is 150 trillion net assets for people, for U.S. households. So 171 trillion in assets, 20 trillion in debt, primarily that's mortgages, 150 trillion, that's the wealth of the United States. And 100 trillion of it is actually IRAs, pension funds, and investment assets. Of that 100 trillion, 34 trillion is what the government has borrowed. Now there's a certain level of interest rates and people's selection that say, okay, about a third of investment assets are in treasuries. That's not really abnormal, but I don't think you're going to get over 50%, meaning you're not going to go to 50% of national assets without a crisis. We're not there yet, but I wanted to cover the subject because it came up this month. I'm Spencer McGowan, your financial weatherman, and McGowanGroup Wealth Management, serving affluent families right here from the Crescent in Dallas, relentless pursuit of superior client profits, and delivering excellence in service on a daily basis. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the longer play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.